Hi, it's Alan Smith coming to you from another great, wonderful 85-degree day down here in sunny Southwest Florida. Well, I've been sending you a lot of homes to look at, and I really appreciate the emails that you folks are sending in or the phone calls that we've been receiving. I hope they're blessing your day and you're seeing some great homes or some opportunities that you can get involved in. We'd be more than happy to do some custom searches for you and send you exactly what you're looking for. We have 4 different systems. If you're not working with Carol or I directly one-on-one, where we talk to you every few days and review the properties you're looking at, you're not on our best system. We have several systems designed depending on when you're looking to buy, because the buyer who's looking to buy something 6 months from now or a year from now is better off to see the entire marketplace. That way you can get a general feel for the properties in different areas and communities and the looks of homes as well as the prices, versus the client who's looking for a piece of property, looking for that perfect home now or within the next 4 to 8 weeks. I like to say 90 days. That requires our home search system, which literally will look at 250 to almost 400 different things that you may want in a home so that we can quickly get it down to exactly what you're looking for. One of the things I'm going to start instituting here, I'm going to ask that you folks do me a favor and start sending me some questions. If you have some questions either on our market or community tours or how things work or financing or foreign investment money, anything along those lines, I'd be more than happy to answer those questions, and I'll put them on the show. And if I put them on the show, we'll get something back to you for those questions. So feel free to email us your questions and your concerns and help us help you the best you can. Lately, I've received a lot of questions from folks, and so what I've done is I've compiled the biggest 4 foreclosure myths or misunderstandings that a lot of people have regarding foreclosures or short sales. I did a video a while back on short sales and how that process works, so hopefully you're much more educated on short sales, the ups and the downs, how to avoid the biggest pitfalls with short sales. But if you have some questions on short sales, give me a call and I'll be more than happy to answer them. Today I'm going to go over 5 biggest foreclosure myths busted. I hear these things all the time and I'm going to explain them to you. So for years into this housing crisis, there's been a lot of myths about foreclosures that still litter the minds of even the smartest of real estate consumers. When it comes to matters as high stakes as your home, confusion can cost you thousands, or even your home for that matter. Whether or not you're a buyer looking at a foreclosure, a homeowner struggling to keep your home, or a seller concerned with making sure your home can compete with the other foreclosed homes on the block, these foreclosure myths are prime for the busting. So with no further ado, I'm going to bring to you my 5 top foreclosure myths that so many people misunderstand. So myth number 1, foreclosures happen fast. With unemployment and the underemployment still affecting nearly 1 in every 4 Americans, no one is immune from fears that a pink slip might quickly turn into a foreclosure notice. According to the Neighbor Works of America, nearly 60% of the families seeking foreclosure counseling cited a job loss or cut wages as the reason they're facing foreclosure. This is some of the reason why I told you before with short sales. Not only does the property have to approve, but the seller has to be approved in order for that short sale to go through. So it's not as simple as just buying a piece of property at the asking price at a short sale, or if they just want to sell because their neighbor or other homes sold, they want to get out because their property is worth less than what they owe. Doesn't work that way. While President Obama's administration's home affordability programs haven't been nearly as effective as he predicted, what's new with that? But anyway, in actually preventing foreclosures, they have had the effect of extending the foreclosure process for many families. Even though the legal process of foreclosure can happen in as few as 6 months in most states, recently J.P. Morgan Chase revealed that their average borrower who loses a home to foreclosure has not made any payments in 14 months nationwide, 22 months if they're living in Florida, and 26 months in New York. Believe those numbers. I've spoken with several clients who have been living in their homes for over a year and a half and not made a payment. They're just living there free, haven't heard anything, and they're loving it, I guess. So to be sure, some see this as good, others view it as unnecessarily dragging out the overall market's recovery, which is exactly what it's doing. Many insiders will point out that these delays in foreclosure may be calculated to save the banks the cost of owning and maintaining foreclosed homes, but not really to help the homeowners out, which is more or less probably the case. In any event, the fact that foreclosure does not happen nearly as fast in many cases as expected does give families who are temporarily down on their luck some extra time to try to get back on their feet and save their homes. Myth number 2, buyers can't get clear title or title insurance on foreclosed homes. When the foreclosure robo-signing scandal first hit, there was widespread concern that buyers would not be able to get clear title on foreclosed homes because the former foreclosed owners might be able to come back to get their homes back when the properties in the bank's foreclosure documentation processes came fully to light. At that same time, several of the counties or the country's largest title insurance companies publicly balked at issuing policies on bank-owned homes until the issue was resolved. Well, at this point, the banks claim that they have revamped their processes, and all the banks have stated that they have found not a single borrower whose home was repossessed without them having missed the requisite number of mortgage payments. Nevertheless, the number of government investigations, as usual, are still in progress. The fact is, buyers of bank-owned properties in nearly every jurisdiction are protected from later title attacks by foreclosed homeowners by the bona fide purchaser rule, under which courts would prefer to simply award cash damages to be paid by the culpable bank to a wrongful foreclosed on homeowner rather than reversing the sale or ownership of the new innocent buyer. Therefore, you really have nothing to worry about. Additionally, the title insurers now have changed their tune and restarted issuing insurance policies on bank-owned homes, which protect buyers' interests after working with the banks for them to take responsibility in the event a former homeowner does prevail in a wrongful foreclosure suit. So you can get title insurance as well. While there are still many intricacies of title to be resolved for foreclosure buyers who purchase homes at trustee sales and auctions, that's like at the courthouse steps, or for cash buyers who often went without title insurance in the past, those who buy without a realtor, I would highly, discourage that. That's be foolish. But on the average, truly a listed bank-owned property purchased with an average mortgage and title insurance, the chances of buyer's title will later be successfully challenged by a foreclosed homeowner on the basis of robo-signing, really thin to non-existent. Okay, myth number 3. Buyers should wait for the shadow inventory to be released. I hear this all the time. Many a buyer discouraged with the homes they see on the MLS or that they're receiving from us in their price range have decided to sit and wait because they think waiting for the banks to release for sale what is called their shadow inventory. We've all heard about that. Rumored to be anywhere from 4 to 6 million homes that have already been foreclosed but just not listed for sale, or they'll be foreclosed on in the near future, like they've got all these sitting in their back vault, which isn't true. The fact is, to the extent that the banks have acknowledged the existence of a pool of homes they own but are not selling, they have expressed interest that their reasoning for holding the homes off the market is to avoid flooding the market and driving home values down any further. For that reason, buyers should not expect to see a massive influx of these shadow homes onto the market anytime soon, and most likely never. The bank's current modus operandi is that they sell a home, they replace it with another home on the market. If they sell 50 homes in Fort Myers for this month, they'll put another 50 back on the month. So, if you're holding your breath for this big flood of homes to come on the market because you're waiting for a fabulous new flood of homes and lower prices, instead, set up an alert with us. We can do your searches to notify you that when homes that fit your search criteria come on the market, and then be ready to call us and go visit or buy that home right away. I've had over 9 people call me this week about homes they found on the internet or homes that I've featured in my tours in the last 2 weeks, which are usually the best buys, and they're already sold and pending, whether or not that's 1 day for up to 12 days sold. The best homes sell fast in this marketplace. Myth number 4, if you're looking for a deal, you're looking for a foreclosure. Despite what that may sound like, no buyer's heart's fondest desires is to buy a foreclosure, but almost every buyer dreams of buying a great home and getting a great deal on it. That's our job, is to help you do that. Many people think that to get a great value on their home on today's market, it means they must buy a foreclosure. As a result, the value and the other advantages of buying an individually owned home on today's market are frequently overlooked. Individual sellers with homes on the market right now are generally quite motivated and understand that they must compete with the discounted short sales and foreclosed home prices. So many times these sellers are slashing their prices in order to get them sold. The most recent Trulia price reduction report revealed that 27% of homes on the market across the country have had at least one price reduction. Now that's what I call a sale. Furthermore, individual owners are often much more negotiable on a wide range of contract terms than a bank which owns a foreclosed home. You can work with non-bank owners on things like repairs, closing dates, choice of escrow providers, closing costs, and much more. On top of that, many individually owned homes are in pristine move-in condition. That is much rarer with foreclosures, which are often in need of much repair. So don't underestimate the value of the deal you might be able to get on non-foreclosed home. Just get clear on what you can afford and look at all the homes that are available in that price range without discriminating against non-foreclosures. I can almost guarantee you that 90% of the time we can find you a better home at a better price in much better condition, exactly what you're looking for without having to deal with foreclosures or short sales. That's just been my experience up to date. Myth number 5 and the last is having a foreclosure on your credit history means it takes years before you can buy again. This is one of the most frequently asked questions I get from homeowners who have just lost a home through a foreclosure is how long will it take before they're able to buy again? Until recently, the standard wisdom has been 5 years minimum. Would have to be elapsed between the time of the foreclosure and the new home purchase. Now, however, borrowers can obtain an FHA loan with as low as a 3.5% minimum down payment required as soon as 3 years following a foreclosure. To do so, though, all your ducks must be in a row and you may have to jump through some hoops. Post-foreclosure buyers need a credit score of 620 to 640 to qualify for an FHA loan, higher for a non-FHA loan. Given that the foreclosure itself usually dings anywhere from 100 to 150 points off your credit score, former homeowners who want to buy again need to ensure that they have no other late payments or credit dings after they lose their home. You must have a clean credit with no derogatory marks, like late credit card payments following your foreclosure, and you may also be required to document 12 to 24 months straight on-time rent payments or home payments, however you're doing that, after your foreclosure. Further, the bank may impose, most likely will impose, a lower debt-to-income ratio on post-foreclosure borrowers than on borrowers who have not had a foreclosure. And they may require a little more down payment, which is what that's saying. Debt-to-income ratio, that would be debt-to-income ratio on all of your bills, or just a simple debt-to-income ratio from how much equity you have in your home. This is an effort to keep your mortgage payments low, to keep you from overextending yourself and boost the chances you'll become a successful homeowner over the long period the next time around. The bank will also need to see 2 years of continuous employment history in the same field. Doesn't have to be the same job, but it has to be in the same field. And documentation that you meet their other basic loan requirements, tax returns, pay stubs, those kinds of things. So that answers a few of the 5 most important questions that I get, or the 5 foreclosure myths. I'm going to be trying to bring you a little more information in some of my tours, along with tours of homes. So go ahead and send me a question that you may have, and I'll put it in a report and see if I can get this information shared to not you. Because you have to remember, if you have a question, there's probably a few more others out there who have the same exact question as you. So go ahead and send them to me along with your request for properties. And we look forward to seeing you when you get ready to buy your piece of paradise down here in Southwest Florida. So go ahead and send me your questions. I'll look forward to talking to you soon. This is Alan Smith down in Southwest Florida. Beautiful sunny day, although it's about 5 o'clock, and as you can see, the sun is starting to go down. It's about 84 degrees out here and absolutely lovely. I look forward to seeing you tomorrow on Friday, and I hope that your Friday at the end of your week is as great as mine. And look forward to talking to you soon. Give me a call, 239-989-1106, or Carol at 239-872-7736. If you're over in Europe or you're in Canada and you'd rather use Skype, our Skype account is the Smith Group Realtors. So give us a call on Skype. We also do video chat. We've got all the technologies covered for you. So give us a call. We look forward to talking to you soon. You guys have a great day. Bye-bye now.